Hello, today is the 9th of July 2016. What I'd like to do is to go over my calls from Thursday and then analyze how the strong rally on Friday influences the long-term predictions. I said after Thursday's close it was a very negative pattern, and unless we gapped up over this high, which would invalidate it, that lower prices should print. Well, as you know, we gapped up over the high, so as usual when I'm wrong, the call is killed before the market opens. MEJT says this rally is a false move and gives us a target of 2125.94. As usual, it's most likely to print on Monday, but if we gap up strongly, it's probably out of reach. We had a number of targets we've been waiting for a long time, and they all printed on the upside. We had 2126.21 from July of last year and 2127.67 from July of last year. The market remembers these numbers forever as support resistance levels. There's resistance over them, so the market has rallied to a resistance level. This is the chart I've shown a few times. Take the 125-day moving average, add 4.9%. The market's not supposed to go too much beyond that. We actually went quite a bit beyond that, but I would forgive this if we gap down sharply Monday. That hasn't happened yet. The critical thing to me isn't whether or not we hit a new high, but whether or not this TD trend line holds. I've been expecting it to hold. It would be invalidated if we were to close over the line and not reverse it immediately by gapping down the next day. However, if we traded over this line Monday, I might not wait for the whole invalidation to throw in the towel, but I'm not certain that's going to happen. Here was your gray wave A down. Here's B. Here's A. Here's B, with A and C of B having a Fibonacci relationship, so it's possible that a wave blue C will start down, and if so, we have to adjust our target slightly because you measure from the TD line, but it's still calling for a drop under 2,000 if this line holds, and that's a critical trend line. We became pretty close to the all-time high, but the breadth is not present. This is the percentage of stocks with healthy patterns. It's way under these highs and way under that low, so the breadth isn't present. Here's a sentiment indicator, the put to call ratio. Everybody wants to be long. It's below the band. The industrials are breaking out. The transports are non-confirming. The NASDAQ McClellan oscillators hit its upper Bollinger. Once it reverses, that's the sell signal. And the volume, where's SPX here? Here's the volume on the drop. Here's the volume on the recovery, almost to a new high. It's just drying up. This is the weekly chart. The green indicates the combo count. We have 11 of the bars. You need 13 to get the sell, but DeMark has a rule that says as long as you have 9 bars of setup, it doesn't matter how you count the bars of countdown as long as you're consistent. And 13 gives a sell. Let's change the rules so that we'll count a bar if its high exceeds the high of the prior one. Then we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Bar 13 of countdown is right here. So by that criteria, we have a sell signal on the weekly chart. And the longer the duration of these bars, the more significant the signal. There's also the matter of the MEJT targets. We have 6 targets from this year which haven't printed, and one of them is also an ultimate. This is very unlikely to stay unsatisfied. For comparison purposes, we have a failed target February 12, 2016. To find the last failed target, you have to go way back over 2 years earlier to early February 2014. Some people can say that maybe it's because they're in a consolidation, all these prices will print sooner or later. Well, to get 6 failed targets, standard targets like this, earlier than these, you have to go all the way back to January 2013, when the market was about 1453. So from 1453 up to this low here, there were 6 failed targets, and here we have 6 failed targets. Since the system was begun in the summer of 2002, there have only been 21 failed targets of this type, not counting these. So in 13.5 years, you have 21. Here we have 6 in a short time frame. The odds are overwhelming it's going to print. We have only 6 other failed ultimate targets since the summer of 2002. The last one came in September 2013. So the odds are overwhelming that one's going to print also. The fact remains, this rally has been a series of 3s, and the declines have been 5s. This is a corrective move, not a start of a new up leg. If we do break through this line, the up leg could go a bit higher, but eventually it should retrace. If we don't break this line, and I think it's going to be obvious early in the day, if we don't break the line, a big drop is coming. If we are going to break the line, the ideal situation would be to gap up over this high. But this is a perfect setup for gapping down, perhaps sharply, Monday's open. And usually when you rally all day Friday, the rally continues. If you have a gap down Monday, if that happens, it's a very clear warning sign that much worse things will be happening to the stock market. And so Monday's open should be critical. We have a target of 2125.94. Gapping up sharply probably puts it out of reach, but if we gap down, we should see this number and a lot lower than that. And that's today's call.